Alrighty, hey traders, John Howell here. Happy weekend to everyone. In today's video, what I want to do is I want to share with you some things about understanding these markets. If you've been involved with these markets for a short time frame, so I would say less than a couple of years, maybe even longer, then I want to share with you some things that's important to understand if you want to be part of this world called trading. That I want to impart some things that are important for you to understand if you want to have longevity in these markets. So if you want to be making money from these markets, for a long time, like for me, I've been trading the markets for 17 years, and out of that 17 years, I've learned so many amazing things that's helped me do really well from trading. And I want to share some of that stuff with you, and both on a technical level and also like how we should be approaching our trading if we want to do well. So let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so let's get straight into it. You're probably wondering, what's going on with the good old Johnny? I have just gotten back from the gym. I go to F45 gym. Sometimes I go to just a normal gym, but most of the time I'm spending my time at F45. And man, it was a killer today. It was an absolute killer today. It was 50% like high intense cardio workout. We're talking bikes, skiing machines, rolling machines, that sort of stuff. And then the other 50% was like heavy deadlift. So it was a killer today. Anyway, so that's why I'm looking the way I'm looking right now. I've just got back, I had a shower, and I'm ready to go to share some stuff with you when it comes to your trading. So first thing I want to start off with is just how we should be thinking about our trading here. And I want to do this because I really want to share some things with you that I think is important for you to understand, okay? So here's the thing. Let's start with a 10,000 foot view of the stock market. What is the stock market, really? Okay, what is the stock market? The stock market is obviously a market of stocks, right? It's a market of stocks. So when they say the stock market went up today, it was like the S&P 500, right? But the stock market is a market of stocks. Now, the way that these stocks operate, they move up and down. Right, they move up and down, and as you can see on the screen here, I'm looking at the S&P 500 or the SPY right now. But let me just take everything off the screen here. Let me take the volume off the screen, and I'm going to take all the trend lines off the screen. I'm just going to zoom into the last sort of couple of months here, and the way the market operates is like a roller coaster, right? Like a roller coaster, or like me at the gym today. What happens is I go to the gym like I did this morning, and I'm balls to the wall, all right? Absolute balls to the wall. In fact, on the skiing machine today, right, on the skiing machine today, it was like, he said, okay, I want you to do 35 calories. I think it was only three quick sessions there. And I smashed it, I doubled almost, I got like 60 calories there. So anyway, so the purpose of me saying that is that I went so hard on the roll machine. He said, all right, 30, 35 is probably going to be your ceiling there. I smashed that, and by the time I complete my session, which is like 20 seconds on, 15 seconds off, 20 seconds on, 15 seconds off, but I went straight through the whole time, right? So three sets of that. So he said, okay, do 35. And what did I do? I went balls to the wall, smashed it, and what did I do? I actually did almost double. I did almost double 35, right? I did 60. And he's like, whoa. But what happened? What happened to me afterwards? And you're probably thinking, John, what the hell are you talking about? Let me explain here, okay? Let me explain. This is how the markets operate. See, what actually happened after I went balls to the wall, I went for it, and I went and had a big move. As soon as I finished, I was like, oh, right? I was like on the ground for like a minute. Right? Because I used so much energy. That I needed a good amount of time to rest before I could go back on the next the next workout, right? Which was like the next workout, whatever it was like. It was like, you know, it was either a weight workout or a cardio workout, right? But that's how the stock market works. And that's why generally when you see big moves happen really quickly, like vertical moves really quickly, guess what happens? It gets exhausted really quickly and it comes back down really quickly, right? But instead of that, when you get a nice bull market or a nice market, it steps slowly, right? It doesn't have too much of a big move, but it has a nice move up and then a nice pullback, nice move up. That's like me going to the gym, right? And then me doing a weight workout where I'm going, pushing, but I'm only pushing for about 20 seconds and I'm having a 15-second break. I'm not going for like a minute and a half, 2 minutes, straight balls to the wall like I was on the ski machine and the rolling machine and the bike and so on and so forth, right? I'm not doing that, right? So if I'm going on the ski machine, balls to the wall for a minute and a half to 2 minutes and I'm just going, guess what? I'm gonna have a big crash, and that's what happens. But if like today I had the bench press or I was doing deadlifts, guess what happened? I do a deadlift for like 25 seconds and then I stop for 15, 20 seconds. When I did that, guess what? I could keep going more further because I wasn't out of breath. I didn't crash. So that's how the markets operate. That's how the markets operate in a nutshell. And that's when we get these pullbacks. So when understanding that foundation's there, that big foundation's there, when do you think is the best probability to be getting in the market? After I have gone balls to the wall for 2 minutes on the roll machine, and then you're going to get in, aka the market's had a balls to the wall move. Do you think it's a good time? Do you think there's a lot of energy at that time for the market to have a very, very, very big move? After I've just done 2 minutes on the ski machine? No. What's likely to happen? It's likely to crash, right? Or it's likely to at least have a really good resting phase. So when is the best time? When do you think is the best time to give you the best chance, right? Because there's no certainties in the markets, and this is where the hard thing when you're involved with the markets, the hardest thing about trading the markets, right, is we're looking for this certainty within the markets. I'm looking for that certain thing that's definitely going to make me money and so on and so forth. But that's not how trading works in a big nutshell, right? How trading works is just like I'm looking for the best probability to get in. And how we do that is through rules, right? But let me get back to the story here, right? When's the best time? When's the best time to jump into a move? After I've just done a minute and a half, 2 minutes on the ski machine and I've just doubled the amount of calories that my instructor told me that I should get, 35, and I did 60. As I'm hitting 60, should you be betting on me to do another big move? No, right? Why? Because I'm tired, I'm exhausted. What's likely to happen? Well, I'm likely to crash, or I'm likely to rest for a minute or two just to get myself back to get my breath back, just to get certain things back before I can go to the next exercise. So that's the same as the markets, right? When's the best time to get in on that? Or when's the best time to bet on me of having a really, really good exercise again? Is it just after I've done 2 minutes on that? Or is it after I've had 2 minutes of rest? Of course, after I've had 2 minutes rest, right? Because now I'm likely to go for another move. But that's how the markets work as well. They go for these big moves, and then they go through these resting phases, these pullbacks, and so on and so forth. And they happen in different phases, right? They may go sideways for a while, or they may just have a pullback and then dip, and so on and so forth. But you can see that this is what actually happens, and this is what's happened with the S&P 500, just looking at these markets, right? And it happens with all markets. We get these dips and pullbacks and whipsaws and so on and so forth. And so I want you to be thinking about that with your trading, is that if you're getting in on the market after I've just done 2 minutes on the ski machine and I've just done double what the instructor said, are you betting on me now to do another really good smashing session on the ski machine? No one would, right? I'm about to collapse. That's the way the market works. After it's done a big move, it's about to either collapse or just do nothing for a while because it needs a rest. That's what's known as, price and time, or just simple trend analysis. So I want you to be thinking about that, because whenever you look at the markets, right, this is what the market does. Now, sometimes sometimes the market the market will have like a big move up and a big move down, right? So if it has a really sharp move up really quickly, guess what happens? It generally comes back down really quickly. But if we have very nice stair steps, then like the S&P 500 has done just by looking at the screen here, right? You can see it's just had very nice stair steps. We haven't had any vertical moves up. And whenever we do get vertical moves, it gets too far away, right? We stretch ourselves too far that we have to snap back. Just like me on the roll machine today, my instructor gave me a target of 35 calories. I hit 60 calories. He's like, oh my goodness, but I crashed for about a minute or so on the floor after I finished, right? Gone. But then I rested and I'm like, oh, cool, I'm back to ready again. Make sense? So that in a nutshell is how the big picture works, right? The big picture of these markets work. Now, let's actually go to that's the 10,000 foot view, right? That if you understand that, that's why when you see big vertical moves up, you're generally going to get a big crash down. Something that goes up really quickly is just like me in the roll machine. Make sense? Something that has a very nice stair stepping is like me on the deadlift. I'm doing deadlift for 20 seconds, and then I'm going to have a break for 15 seconds, right? So I can continue having very nice movement in that direction by having short-term breaks instead of going for a minute and a half, 2 minutes straight on the skiing machine, as an example. But let's actually bring this down to another level here. So we have that, okay? But whenever we look at the markets as on the next level down, you think about the markets as it moves up and down, and it makes these patterns. It makes the head and shoulder formations, the double tops, the double bottoms, the wedges, the triangle patterns, etc., right? This is where the biggest myth out there when it comes to trading and what stops trading and it didn't make sense to me for so many years, and what caused me to lose $250,000 in the markets. Now that was when I first started 17 years ago, right? I've since made a lot of money from the markets and done well from it. But when I first started, that was the reason why was because firstly, I didn't understand the nature of a plan, right? Of a system. And the nature of a system is really just that, right? It's just it's a system, it's an approach to trading the markets. And so when we're looking at the markets, we have these patterns that form. And these patterns can become trading systems. That's what a trading system really is, right? It's just a pattern that forms on the market. And then out of that pattern, you have an entry and exits and so on and so forth, right? Just how you manage that. So the thing that stops most people from doing really well out of the markets is this thing, more trades, more money. Now that can be true if you've got a high win-loss ratio, but that doesn't tend to work like that. What I have found is that I have a couple of different systems that I trade, aka patterns, right? And again, I have in the Master Trader membership that I'm giving away free access to, plus weekly insights, monthly live coaching, so on and so forth. The very first link in the description, go click on that and you'll be able to get free access, a free trial to that. And I'll share with you 4 different main patterns and trading systems that I like to look at. You'll be able to get that in that link in the description. But the thing is this, guys. When these patterns form, there are patterns out there that are going to give you a very high win-loss ratio, like a 90+% win-loss ratio, meaning 90+% of the time, it's going to make a profit, right? And obviously 10% of the time, no. Now, here's the thing that I have found, is that the higher the win-loss ratio of any pattern, the fewer the trades you're going to have. But the fewer losses you're going to have. So one thing I have found is that what gives me confidence to jump in the markets with not just a small position, but with a larger position instead of not just $1,000, but a much larger position in the markets, is especially when I get those 90% winners, I know I'm going to have very, very few losses with that sort of trading system, that sort of trading pattern. That when it comes around, I know that one, there's not going to be many of them. There might be, trading the daily chart. This is that there might be only maybe a couple of dozen of them, throughout the entire year trading the daily charts. Now, if you go to the 15-minute charts and 5-minute charts, you probably get a couple per week on average, right? So I'm just using the numbers here. So with saying that, you're likely to have not many. So if you trade a system like that, the number one thing is patience, right? Is understanding that, okay, if I go outside of these rules here, this rule to this system, then I know that I'm breaking the rules, therefore I'm not likely to do well, right? It's like if you're on a diet, right? You're sticking to a diet and you go off the diet. What's likely to happen when you go off the diet? You're not going to do too well. That's the same within a business plan or a trading system, right? You have a set of rules, and every time you go outside of those rules, you're impatient, you haven't had a trade for a whole week, because maybe you're trading a higher win-loss ratio strategy, therefore you might not have a trade for a whole month, and then the next month you might have 4 or 5 trades, right? That's just the way that sort of system works. So your number one thing there is going to be your patience, right? That's what's going to cause you to do really well. But the thing is, if you can be patient through those times when not much is going on, see, we think we need to be, because the market's moving up and down, up and down, up and down, up and down, we need to be trading all the time, right? We don't need to be to be doing that. That's actually going to cause a lot of emotion, a lot of stress, a lot of mistakes, and it's just going to cause you to go backwards. I have found that actually the less I trade, the more I make. That's why I like trading a high win-loss ratio pattern, sitting back and saying, I'm not going to do anything until I see this pattern. Even if I only have 20, 30 trades throughout the entire year, guess what? I'm going to have a really successful year compared to someone that's got about 100 trades. Because the person that has 100 trades, I guarantee is going to make a lot of mistakes and so on and so forth. Now, that's not true in all fairness, right? But I'm just giving you sort of like the apples there, right? But let's look at this here. So the higher the win-loss ratio pattern that you're trading, the more patient you need to be to wait for that setup. But also the understanding that the less losses you're going to have as well too. Now let's go down the scale. Let's go down from a 90% success rate system down to a 70% success rate system. A 70% success rate system, or even a 60% success rate system, which can be profitable, guess what? Because it's a lower win-loss ratio strategy pattern, therefore you're going to have a lot more of them throughout the entire year. Makes sense? You're going to have a lot more of those trades happen all the time. But guess what is also going to happen? Just by the nature of the system, a 60 or 70% success rate, you're also going to have a lot more losses in there. So you may take 20 trades and you might have 4 or 5 or 6 losses within those 20 trades. But if you manage that right, therefore you make money, especially if you've got a 1.5 to 2 times. If you've got an average of 2 times profit compared to your 1 loss on average, then you take 20 trades and you're 70% right, guess what? You've made money. So within that system, one is patience, but one thing that's really, 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 really important in that is your discipline to stick into the approach. See, and that's where a lot of traders go wrong. They want to trade a lot, which is a low win-loss ratio system. They may have 2 or 3 losing trades in a row, which might just be natural for that time for that system. It's just a natural thing. And they say, this system doesn't work, I quit, so on and so forth. I thought this made money, I thought this worked. I thought you knew what you're talking about. But hang on a minute, that's not the way trading works, right? Especially when trading a low win-loss ratio. You might just be going through those periods where it doesn't. Especially, now, if you didn't really stick to that system and now you say it doesn't work, then you're kidding yourself, right? So looking at that and looking at the, oh man, my hair. And I'm sweating like a bitch here. I'm going to put the aircon on. Give me a sec, guys. I'm going to put the aircon on. All right, I'm back now. Hopefully the aircon's working. It's hot like a bitch here. Anyway, so where was I? Oh yeah, success rate and systems, right? So within, so now you understand the 10,000 foot approach, the understanding of how these markets work, where probability is in these markets. Then when we come down to these systems, these patterns that work, then there's the obviously the higher the win-loss ratio strategy, generally the less trade you're going to have. The lower the win-loss ratio strategy, the more the the more trades you're going to have. But here's the thing, especially with the lower win-loss ratio strategy, if you want to be successful with that strategy, your number one thing is discipline. This is the hardest thing for most traders out there to understand, is they are getting into a trade with the hopes of making money on this one trade. That's not how trading works, right? Because no matter how much you think you know, anything can happen in any moment that's going to cause that thing to be a loss. Now, especially if you have a lower win-loss ratio strategy, you got to accept the fact that you could have many consecutive losses or consecutive losses in a row, because that's what the system's doing at that time. Sometimes you might have 10 successful profitable trades in a row, and then you might have 3 losses in a row. Then you might have 4 wins, 2 losses. Then you might have 2 wins, 1 loss, 3 wins, 1 loss, 6 wins, 4 losses. You know what I'm saying? Especially with a 60 or 70% success rate. But that's the nature of the beast. But where most traders go wrong with the markets is they're trying to pick and choose which one they think is going to make money. Now, what tends to happen there is because they think they try to be smarter than the markets, the ones they think is going to make money, they double up on. They're the actual losses. Then when the next trade comes around, because they just should have been consistent at taking the trades every single time, right? Guess what? The next trade they don't take is a successful trade. And so you can see how this is a negative downward spiral. Not only do you not take the successful trade, which could have made you, let's just call it $1,000. Could have made you $1,000. Not only did you not take that trade, but then you took this trade, which should have been a $300 loss, but now it's actually a $700 loss because you doubled up because you want to make money really, really quickly, and then it's a negative downward spiral. And it has nothing to do with the system. It has nothing to do with the markets. The market's not here to get you. The market's not here to here we go, right? And in that Master Trader free trial, that Master Trader membership, in one of the videos I talk about I talk about the foundations of what goes into a good trader. There's actually a whole section there. So check that out. You can check it out for free. But that's how the markets work, right? And this is where, if you want to have longevity in these markets, the number one thing to your approach here is these 3 words: consistency. Consistency starts with, what system are you trading? Are you trading one? Are you trading a couple of different patterns? Like, what are you trading? And the thing is that that's where, if you're not consistent at that, then it's like the diet, right? If you're not consistent at being on a diet, if you're not consistently training hard, you're not going to get, when the instructor says, I want you to hit 35 calories, there's no way I'm going to get that 60 calories like I did today if I haven't been training my ass off for the last 4 or 5 months. You see what I'm saying there? Because the consistency of doing that and doing the small little things equaled me to actually get the big reward, the 60 calories, instead of just almost doubling what the instructor thought was the ceiling for us. So that's the consistency part. And if you deviate from the consistency, which is, okay, well, I know this is my plan, but everyone's talking about this trade, and then the FOMO kicks in and you're jumping on this thing, everyone's talking about it, and actually the nature of the beast, when everyone is talking about something in the markets, it's actually probably likely to be the opposite. So if everyone's screaming the same thing, run! There's the door! Go! Right? Just go. So that's what you want to be focusing on. But then at the end of the day, if you can sit back and just, okay, hang on a minute. So are you saying that, okay, I'm going to approach this market here, and I'm going to trade a system, say a 90% success rate. If you want a trading system that gives you a 90% success rate, again, in the Master Trader membership, or I can join my coaching program, and I'm happy to share with, but free trial in the Master Trader, a free trial to the Master Trader membership, you'll be able to see the systems there, and you'll be able to see that system that gets a very high win-loss ratio. Just stick to that, right? You sit back and say, okay, are you saying that all I have to do is sit back, wait for this pattern, and take it? And whether this is a successful trade or not, makes money or not, Who cares? Because I know I'm going to make money every year. And that's the switch that happened for me. Because I no longer try to make money every trade. Like, okay, that was just one of those losing trades. And every time I'm like a robot, right? I'm a mechanic in this process. Here's the system, here's the pattern, take the trade. There's a profit, there's a profit, there's a profit, there's a profit. Oh, there's a loss, there's a loss, there's a profit, there's a profit. There's a really big profit. Oh, wow. You know what I'm saying? And so all you have to do is sit back. But because the bullshit marketing that's out there in the marketplace right now that says you can make $1,000 a week trading these markets, which you can with the right skills, that does take you time to understand that. People are saying, well, you could do this, you could do that, you could do this with the markets there. So the 10,000 foot view is understanding how the markets really work. They work in sort of operating the way that I talked about here. And then you've got to bring it back down to the next level that all the market is just makes patterns. That's what technical analysis really is, right? We're talking about trading the markets. Investing is a completely different approach. Investing is looking at fundamentals, looking at the big macro picture where things are going, cycles, so on and so forth, and then positioning for a couple of years sort of timeline minimum, maybe more from that. Make sense? That's investing. But if you're looking for trading for an income throughout the entire year, then these are some things that are really important to understand and to think about when it comes to this. And I promise you that if you can just step back, one, no system's going to give you a 100% success rate. But that's the big problem, right? Because we go to the markets, you may see a market update from me, and you might say, oh, this market looks bearish, so I'm going to take a bear, I'm going to short this market right now. You're just guessing. If you want to have longevity, there must be systems. There must be probabilities. If I take 10 trades of this one system, I'm likely to have a 70% success rate. Cool. I don't know which trade's going to be a loss or which trade's going to be a profit, but all I do know, if I do my job and keep my risk small every trade, I'm going to make money. And that's what happens, right? Get out of your own way and stop trying to be right with the markets. Get out of your own mind, get out of your own way, stop trying to be right, stop trying to make a lot of money really quickly. But then guess what happens? You actually do make money, you do actually make a good amount of money really quickly. Especially if you're risking small on your account, because you're looking at protecting your account, not making money. And that's the number one game that switched it for me. Every time I went from loading up big on a trade, I was focusing on what? Making money. And because I was doing that, I generally wasn't really focusing any plan. I was just focusing on making a lot of money. But every time I actually entered the trade with lower risk, trying to keep my risk small per trade, keep my risk small per trade, what was I focusing on? My focus on there was what? Trading a really good pattern and then keeping my risk small. And then just consistently do that. And when I do that, I make money. And it's an opposite, right? Whenever I'm just focusing on protecting my account as much as possible, I'm actually trading well, therefore I make money. But whenever I load up big time in the markets, I'm focusing on making money, therefore I'm not really in it. I'm just making something up because I just think it's going to make a lot of money really quickly. And almost 100% of the time, every time I load up, guess what? I get the fucking hammer from the markets, right? So, hope you enjoyed today's session there, guys. This is just an understanding view. If you follow the markets for a couple of years and you're trying to understand how's this thing work and what's the path, what should I be thinking about? Here's some things to be thinking about when it comes to these markets. And I promise you that if you want to be in these markets for a couple of years from now, maybe a year or two from now, and actually doing well, these are the big things that stopped me from doing well for so long. And it took me a long time to actually figure out the knowledge that I've actually shared with you. But when we can start to put these pieces together of 10,000 foot view, how the markets work, bring it back down to patterns, and then the patterns have a win-loss ratio, understanding that a high win-loss ratio strategy is going to have lesser trades throughout the entire year, but less losses, but a lower win-loss ratio strategy is going to have more trades, but more losses. And you can never know which one's going to be loss, which one's going to be profit, and so on and so forth, and then stuff like that. You could start to apply this rule here. And I promise you that if you look at this market as a not a now thing, but a long time thing, and just sit back and just say, you know what, even if I've got $5,000 in my account right now, I'm going to risk real small per trade, and I'm going to slowly grow that. Because I promise you, if you start to do $3,000 or $4,000 trades really quickly, you're probably likely to blow that up. You're probably likely to blow half your account up really, really quickly, right? But if you're only having maybe a $200 risk on your account per trade for that, you know, now you can start to like, oh, you might get 1 or 2 trades per week, and now your account's growing at maybe $400 or $500 a week. You know what I mean? And before you know it, your account's doing a couple 100% per year. So anyway, hope this speaks you out. But the whole blanket thing here is your consistency of what you're approaching, then your discipline to actually stick into that no matter what, and then really the patience. The patience is the big thing that's probably the big thing out of the markets is the willingness to step back. And as the market's moving up and down and making these patterns and people are screaming and blah, 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 you're not doing anything because guess what? It doesn't actually meet your rules. So hope you enjoyed today's video, guys. Once again, if you'd like to get more stuff like this, of not just the foundation stuff, but also chart reading techniques, again, full trading systems, weekly insights, monthly live sessions, and so on and so forth, I'm giving you a free trial to my Master Trader membership. Then link in the description, go click on that, and I'll see you very, very soon.